What's up, investors? Today I am bringing you Research Paper Explained. So, this is a new series of mine, and my goal with this series is to explain to you research papers that I've been reading. So, research papers can be hard to get through, and they're kind of annoying to read as well because they're very academic and academically written. So what I want to do is I just want to take a few key takeaways from it and explain it to you with the goal to make you a better investor. So I have actually read this research paper and I created a few slides to make a video out of it. So I'm basically just winging it. So we're going to talk about the research paper Familiarity Breeds Short-Termism. It is a paper from 2019 and it is written by Elapuli Vesudivan, or however you pronounce that. I will leave a link to the research paper below, or in the description, so that you can read it yourself if you're interested. But with this video, like 15 minutes or something, and you will have everything you need to know from this research paper, in my opinion. So this guy, Elapuli, he took the data from over 300,000 Finnish investors and about 70,000 US investors, but I'm going to stick to the Finnish investors for now. So if you want to see the results from the US investors, you can check the research paper. The results are pretty much the same, so I thought it would be easier to just stick to the Finnish investors. So he grabbed the data from those 300,000 people, and he checked the research period of 1995 to 2014. And what did he do? He researched their round trip on the same stock. And what is their round trip? Well, the round trip is when they buy a stock and they sell it again. That is a round trip. What is also a round trip is when you buy a stock, you add to your position, you do a DCA, dollar cost average, up or down. Let's say you buy 10 times, then you sell everything. That's also a round trip. And that is basically what he's been checking. And what he wanted to see is how this selling everything and how does that affect their investing results and their emotional way of investing. So the end result of this is hold on to the stocks you love, but I will explain it in the end why that is the case. So let's start. So here you see a summary of all the data that has been used and some of the conclusions that you can draw from it already. So here you see the number of investors, over 300,000. Let's start with the top as well. Here it says investors who initiate a position on the stock for the second time, sixth time, 10th time. So what does that mean? He is basically talking about the round trips here. So how many of those 300,000 people sold all of their positions of one company in particular and then decided to buy it back at a later point in life? And that is about 40%. So 127,000 people decided to, once they had closed their position, they decided to buy the stock back. Over 32,000 people, so that's about 10%, actually reached the sixth time. So they bought it once everything, then sold everything, bought once, etc., until the sixth time. And like 5% went for the 10th time. So they just kept buying, selling, buying, selling, buying, selling. So later on, we're going to see how does that impact their investing style. But let's go through this for now because there's more relevant information here. Investor age in years. Here you see the ages, and you basically see that it's not just young people who decided to trade stocks instead of holding it long term. No, it's actually older people that have been doing this, because you can see that the average goes up. So that means that there's more old people here than there were here, relatively. Something else that's very interesting is the female investors in percentage. In all the data, there was 26.7% female, and only 18.5% of the 127,000 went back into the position after selling it. So you can see that men are more likely to go into the same position than women once they have sold everything. That's also very interesting. And something that might be just interesting for anybody who's watching is how many stocks did they have in their portfolio. So all the investors had an average of 5, let's say 5, like 4.9, and you see that it increases a bit. And stocks familiarized over time, that is basically the stocks that they have been selling repeatedly, and you see that they have been, once they are selling regularly, they increase the amount of companies that they sell and buy regularly, and here you see it as well. So it's not like they're just trading with one company, they trade with a lot of companies several times. So this one, here you see the effect that the decisions that they've made on their holding time. So what it says here is mean holding period in trading days, and here conditional on nth repeat purchase of a stock. And so here you see the square, that is 3. So once they have had the stock and they have sold that stock 3 times, their holding period goes from 160 trading days to 120 trading days. Once they go to 5, and that you see here, it goes from, what is it, about 130 to 90, 190 between 90 and 100. And as you can see, the lower you go, so the more times you trade a familiar stock, the shorter your holding period is going to be. So the moment you decide to sell a stock that you've been holding for a very long time, but you like it and you just think that it's going to drop more and you just want to time the market, basically, the more often you do it, the more likely you are, at least on average, to sell the stock in a short, no, that's the wrong way to say it, to hold the stock for a shorter period of time. And as a long-term investor, you basically want to avoid that. So it goes from 160, the more you trade, you go more to the rows like 40 days. So trading stocks actually makes you more likely to become a short-term investor. That's not all that is interesting, because what we obviously want to know is how did these results impact, or how did these decisions impact their results. And the most interesting one, in my opinion, is the final trip. What this means is this is the average trip, non-final trip, and we're talking about the round trips here. I'm gonna just stick to the excess returns, by the way, so this page. This includes all the trips, so if it's just one trip, it's kind of easy, and here it's 2 trips. And what is interesting is that the more you buy and sell instead of holding, the bigger your loss is going to be. And this is your gross return compared to what your return would be if you would have held the stock. So the more you trade it, the worse your return is going to be. But what I like the most about this is the final trip. So as you can see here, it slowly gets worse returns. And what is surprising to me, or what I find very interesting, is that it gets worse, and you also are holding the stock for a shorter period of time. So your returns are going to get worse, and you're holding the stock for a shorter period of time. And what you can draw from this, all these numbers, hey, it gets worse, so the investor could think, wait, this isn't working, I'm quitting. I'm no longer buying and selling and trying to time the market. I'm quitting it because it gets worse and worse. So that's also very interesting. But what is most important is which conclusions can we draw from this? And that's what we see here. So I'm just gonna read this and then we'll talk a bit about it. On average, the holding period shortens by 11% with each additional round trip. So that is what we saw in the figure table with the 160 days, and the moment you trade you do 9 round trips, it becomes like 40 days. So each trade that you do, you're holding the stock 11% shorter on average. So the more trading you do, the more likely you are to become a short-term investor. The second one, on average, the returns of the investor become worse with each additional round trip. So the moment you start and decide to time the market because you think it's going to go lower or something like that, it is more likely on average that you're going to get worse results on that company. So it's better to just hold the company. And this one, the third one, the additional round trips are caused by reinforced learning. We tell ourselves we would have made better returns had we sold earlier. And this is something that we maybe need to talk about for a bit, because let's say a stock is going up or down and you sell it. After you sell it, there's only two things that can happen. Either it goes up or it goes down. So let's say it was going down and you decide to sell and it goes up. What are your thoughts? It's either A, I shouldn't have sold, or B, I should have sold earlier. If it is going down and the stock goes down after you sold it, your thoughts are going to be, it's good that I sold, or I should have sold earlier. So in both occasions, you're always going to think that it would have been better to sell the company earlier. And that is something to keep in mind, because it doesn't matter what's going to happen after you sell it. You were going to tell yourself that it would have been better if you had sold earlier. And that is also why probably, and that's the emotional part of it, on average, the holding period shortens by 11% with each additional trip, because you're telling yourself, we all are, once we have sold it, hey, it is better to sell it earlier. So very, very risky in a way, because we are not aware of this, but it could really affect our investment results. And the final one, investors become short-termed as they become more familiar with trading a stock instead of holding a stock. And this is basically the danger that summarizes whatever is the first three reasons were, because as long-term investors, we really want to avoid that we become traders instead of investors. So even in a bear market like we're in now, it is better to hold your stocks than start trading it, because over the long run you are gonna turn into a short-term investor probably, and your results are gonna get hurt by it. So don't start trading your stocks. Alright, that's it. Thank you for watching. If you like this kind of video, please leave a like, and also let me know down in the comments, because this is just something new I wanted to try to see if people would be interested in it. So I'd appreciate it if you guys would let me know if you would like to see more of this. So thank you for watching and have a nice day.